S. Naren, Chief Investment Officer with ICICI Prudential AMC, joins us live. Naren, good morning and thank you for joining us. Naren, we're not going anywhere. Nifty is just moving in a very narrow and a tight 100-point range. Do you think we could be staring at a very range-bound market till the outcome of general elections?
Barring some global event, clearly the market will be range-bound till elections. Because the fact is that markets are fairly valued, and it's not that the market is either cheap or costly. They are fairly valued. Investors are under-invested in equity, and markets are fairly valued. So it has to await a trigger. So that's why we are in this completely range-bound mode right now. And it will continue all the way till you keep getting election news, and you have maybe it can react to opinion polls and alliances and coalition formations, etc. pre-election.
What is the importance of RBI policy in the Fed policy? Do you think that could be a big event, but the outcome of, irrespective of the outcome, it's not going to be a big market moving event?
Our view has been that whatever happens, you have such an intense slowdown in the economy. The intense slowdown in the economy will bring down interest rates. And, so that's a kind of a certainty, because I don't think, whatever feedback we get on what's happening in the economy shows a very, very deep slowdown. So I think interest rates are headed downward. And I don't think RBI policy is going to be something which is going to scare the market like what happened last year. I think the RBI will be supportive of the market. Liquidity could be tight because the government fiscal deficit, if they want to keep it under control, the liquidity will be tight, because a lot of either tax or non-tax revenues have to go up in the next 2-3 months. There is lot of scope for the government to raise a lot of non-tax revenue. So I think liquidity will be a tight till March, but I'm not a believer that these events are going to drastically change equity markets. It may help a bit because RBI will be hopefully not hawkish. But these are not things which are going to change the market, equity markets at least.
Do you think IT stocks in general have a long way to go, because now IT companies are delivering irrespective of the currency correlation?
I think my colleague Mrinal put it that as long as Indian GDP growth is below 6% and US is doing reasonably well, tech is bound to do well. So I think it's a good play on the fact that the world GDP growth is accelerating and Indian GDP growth is much below trend. I think once we see Indian GDP growth go back to its above 6% model, I think then we will have to see what happens to IT, because I believe that IT can then underperform on a relative basis. But at this point of time, clearly everything is in favor for it.
Naren, what's the sense that you're getting about banks? Because they've been so beaten down last many months. In fact, the bank Nifty itself on a technical level got very close to, entering its bear market zone. And then yesterday, suddenly you've seen a bump up. How have you analyzed the trend when it comes to the earnings from the banking pack? Because quite clearly, asset quality continues to remain a concern.
Actually, banks is a very difficult play, because we are extremely positive on interest rates coming down and gilt yields coming down. And that I think there is a long way for it to go down, given the slowdown trends in the economy, the substantially improved current account deficit in the economy. So, interest rates going down is normally considered to be good for banks. So I think that part of it is going to be extremely positive, because we're very positive on interest rates coming down. The banks is also a function of net interest margin, NPLs, and growth rates. And I think the outlook on these three, is not as clear as it is on interest rates coming down. So I think we will go through a phase, till you see NPLs coming down. Again, just like as I pointed out in IT, the day GDP growth goes back to about 6% and industrial production goes back to, let's say, plus 5-6%. I think the outlook on banks is likely to improve, particularly if credit growth continues to be as high as what it is today.
Naren, one call once again which has benefited you was to move into the mid-cap space. The world was shying away from the mid-cap space, but in the month of November you allocated disproportionate amount of money into mid and small cap space. Do you think that arbitrage is over? Because most of the quality mid-cap stocks are up more than 25 to 50% from the recent lows.
See, a very tactical 2-month, 3-month kind of view, maybe it's not very clear what happens to mid-caps. But if I take the underperformance of mid-caps, they were very, very substantial over the last 5, 6 years or 7 years. So I think that underperformance has not got corrected in the last 2 months. Some part of there has been a rally, and I do agree, maybe very tactically, there could be some underperformance against large caps. But I think when the move to lower interest rates happen, when the move to industrial production normalizing to 5-6% happens, clearly the mid caps and small caps have a long way to go. They have underperformed large caps for a long period of time. Sectors like technology, FMCG, pharma, these are all sectors which are still trading at more than 20 to 30 PE. Whereas the mid caps are all trading at single digit PE. So there's a long way to go for them. But I would say it may not happen in the next 2 months, but as and when economic growth picks up, it is bound to happen much more than what we've seen in the last 2 months.
Naren, how would you assess the auto space? Because it's so split and it's so based on individual cases and theories. I mean, just yesterday we had an Ashok Leyland which has posted an operation level loss for the first time in its history. And then again, there are names like Tata Motors which are only rearing higher.
No, basically it's simple. If you see the domestic auto market, we've been negative for quite some time. We continue to be negative. At least till inflation comes down, I don't think there is any reason to be positive on the domestic auto market. But as you correctly pointed out, there are many global companies which are sitting as domestic auto players, and those companies have been doing well because globally economy auto has all been doing well. If you see the US auto market, it is in extremely good shape. You've seen a beautiful rally in all US auto numbers over the last 3 years, and all the numbers I think are closer to, they've seen a phenomenal growth in the last 2 years. So I think the global companies have done well, which are listed in India and are auto companies. This includes surprisingly some ancillaries, where again there are some companies which have a solid global footprint. They've done very, very well. But the Indian auto companies, I don't see there's any improvement in the environment in the next 3 to 6 months. I guess it will take quite some more time to play out. And unlike some other sectors, here the stocks don't seem to correct at all. And so if you go back 2 years back and told people this is the kind of two-wheeler growth, this is the kind of four-wheeler growth, this is the kind of UV growth you will get, and you had asked people what would be the share prices of some of these stocks, they would have said much lower than what the prices are today. But if the sector were to correct, I would cyclically be very positive, because I think if I take a 3 to 5 year view, the numbers right now on all the auto growth will improve significantly. You are not going to have continuously growth in CV of minus 50% or two-wheeler of 2 and 3% and cars being negative. So all these numbers will improve, but currently the stock market valuations don't reflect the lower growth numbers.
Naren, we've seen a mini scare in the telecom space. There is a fear that competition in the entire telecom space will intensify. A big player would really decimate the entire price point and entry points. Do you think the current decline in telecom sector, the sector which you track with the magnifying glass, the current decline is a good buying opportunity?
Yeah, actually it is, but it's very frustrating for long-term investors. See, we saw an opportunity in 2010, bought Telecom. In 2011, again, the problems disappeared. We sold Telecom. In 2012, the problems came in a very intense way. We bought Telecom. In 13, again, people forgot the problems. So again, now the problems have come up in 14. But, if you have an environment where every alternate year the environment looks okay and an alternate year where the environment looks very bad, a long-term investor will actually get very upset with such a sector. So, for people like us who are into this business on a long-term, on a full-time basis, I think the sector gives me beautiful opportunities to buy and beautiful opportunities to sell, but it's not been good for a long-term investor. It's only been good for fund managers like us who have been able to buy in 1 year and sell in another year.
So where is deep value in this market, Naren? Consumers are still expensive, autos are not growing, telecom, we don't know which way the regime is headed, IT is overcrowded, and banks, they have their own fundamental or core issues.
No, the deep value is certainly in PSUs. I think there is such a deep value at this point of time. You would have seen a stock where suddenly out of the blue we got a 10% dividend yield. And, even after 10% dividend yield, there are a lot of cash lying in a lot of the companies. So I think PSUs have been systematically derated, and I classify PSUs into two. One, operating in very competitive markets, and second, operating in less competitive markets. In my opinion, my favorite asset at this point of time would be the PSU operating less competitive markets, because both the segments have got derated. Both the PSUs operating in competitive markets and the PSUs operating in non-competitive markets, both have got derated, giving a beautiful opportunity for investors. Because, all the time you can't have a situation where PSUs can get derated. Clearly, this year, for example, in some of the companies, the government has realized that the value has become so deep, it is much better to not do a disinvestment. So I think that situation has come, which shows that government has realized that the stocks have become very cheap. Now, hopefully, they'll come up with value-enhancing models to handle the PSUs. Then PSUs are my favorite value asset at this point of time. Of course, as fund managers, we have to do deep work, so we will have to look at each company. We'll see what kind of competitive environment which is operating, what are the regulatory risks in each of the stocks, what are the long-term growth outlook in each of the stocks, which is why we have all these fantastic analyst teams. So we'll have to work on them. But PSU is my favorite value asset at this point of time.
Okay, Naren. Good having you on the show, and really appreciate you taking the time out and joining us.